What's up, guys? In today's episode, we're going to be talking about the best 3 technology/AI ETFs to buy right now in 2025. There's truly no better time to start investing your money in AI than right now. The global AI market is expected to reach $1.81 trillion by 2030. All right, the first one we're going to look at is the Global X Artificial Intelligence and Technology ETF under ticker AIQ. This is managed by Global X. They're a very reputable ETF company, and they make a lot of great ETFs that really stand out compared to other companies. The management style is passive. Their fund flows is $3.08 billion, so how much funds they're putting into the company. Now the expense ratio is a little higher, 0.68%, not the highest that I'll talk about today. Their assets under management are $6.35 billion, so huge amount. If we look at their performance over the past 3 months, they're up 14%. Year to date, they're up 29.16%, and over the past 3 years, 161.95%. Obviously, technology services is their biggest holdings in this ETF, but also electronic technology and retail trade are some of the other larger holdings that they have in the ETF. So their top 10 holdings are AMD. They actually just released that they're making this huge deal with OpenAI. Samsung Electronics, very good name there. They have a large market share in the electronics industry. Alibaba has really been breaking out from what they will do with the future of AI. Obviously Google's huge. There's Gemini, and yeah, they have a very large market share in the technology industry. And then they also have Tencent Holdings, Taiwan Semiconductor Manufacturing. That's huge. Basically what sources these, semiconductors, these chips to these AI companies. Apple, obviously, they're a little bit more behind in the AI space. Now, finally, their dividend, not really that strong, but you're not investing in this company for the dividend. You're investing in it for the future growth. Their dividend amount as of January 2025 was 4 cents. So nothing crazy there. All right, the next ETF is the Roundhill Generative AI and Technology ETF under ticker CHAT. This management style is active, so potentially you could get a higher return than the S&P 500 or the broader index. Their main goal in an active management style to outperform the sector. So this is the highest expense ratio, 0.75%. Still really nothing crazy. A lot of your money is not going towards that expense. You'll definitely be able to make it back with the gains that you could get. Assets under management is a little less than what we saw from the previous one, 923.25 million. Funds flow is 511.58 million, and they do not have any dividend. Over the past 3 months, they performed a 27.32% gain. Year to date, they're up 54.49%. In the past 3 years, 146.51%. So they don't really have too much cash on standby, 0.20%. I'm sure that they're going to probably invest that eventually. They may be holding off. The AI companies and technology companies are very overvalued right now. Not to mention the stock market's very volatile with, political and, economic news. So their biggest holdings is in the electronic technology industry, and then technology services, retail trade, and communications follow. So their biggest holding is in NVIDIA. NVIDIA is huge. They also made a big deal with OpenAI. They have Google, Oracle, Microsoft, Meta, Broadcom, Tencent again, ARM, AMD, and SoftBank Group Corp. So a lot like the other one that we saw. And the next one I'll show is pretty much the same holdings. They're a little bit more different and diversified. I would say this one actually, although it is an active ETF, is kind of safer names. They have NVIDIA, Alphabet, Oracle, but altogether really just, kind of the same names. Now the last ETF that I'm going to go over is the Technology Selector Sector SPDR Fund ETF under ticker XLK. Now this again is a passive management style, so they're not really trying to outperform the sector, but you'll definitely get some good gains. The brand that runs this is SPDR, very, very reputable brand. They make a lot of passive, active management style ETFs that have been able to perform very well. Now if you care about the expense ratio, this is the one that I would definitely recommend buying. It says the lowest expense ratio, 0.08%. Assets under management is the biggest that we have seen, 89 billion. Funds flow, 2.52 billion. They do pay out a dividend. The current dividend yield right now is 0.53%. Now, if you're looking for the safest, most reliable, and less expensive ETF to buy into, it would definitely be the SPDR. Extremely reputable. You'll definitely get a positive gain depending, if the market is going up or not. Over the past 3 months, they've had a 10.11% gain. Year to date, 21.22%. 3 years, 134.47%. So, lagging a little behind the other ETFs that I've shown, but you're going to get a positive gain from this. Now their holdings, this is a lot like the other one that I mentioned, electronic technology, technology services, producer manufacturing, and commercial services are their holdings and actually do invest 0.07% in a mutual fund. Like I said, this is a very safe ETF to buy. Now they hold names like Nvidia, Microsoft, Apple, Broadcom, Oracle, Palantir, AMD, Cisco, IBM, and Salesforce, all very reputable companies. Now you're also buying this for the dividend, depending how many shares you get. It's really not that strong if you're not investing that much money into it. It's extremely stable. As of September 2025, the dividend amount was 0.358. Now in my mind, those are the best 3 ETFs that I have seen so far in the AI and technology space. Definitely make sure to do your own research, look at their holdings, look at their expense ratio, and you decide whether or not you like the ETF. Personally, one ETF that I'm definitely trading into is AIQ. It's relatively cheap. You can buy a lot of shares of it. It's trading at around $50. Has very high returns and has outperformed the sector. Good holdings. Also pays out, somewhat of a good dividend. And, with this growing AI space, should expect, a very solid return. Be on the lookout for weekly and economic stock market updates. I'm going to be posting those in the post tab in my YouTube channel, so definitely check that out. And I'm also in the works of creating a weekly mail letter. This is not investment advice. This is all for educational purposes only. Definitely make sure to leave your thoughts and opinions down in the comment. Subscribe if you haven't already. It really helps me and helps the channel. And thank you for watching this episode. I'll catch you in the next one.